Hey everyone, welcome back to Corporate Decoder, where we help you understand the murky depths of corporate filings so you don't have to. Today we're diving into One Cessna 6 Corp's latest quarterly report, which shows a company navigating some interesting waters. This report covers the 3 months ending June 30th of 2025. It's like a financial snapshot of the company during that time. So what exactly is 1606 Corp about? They're an AI company. Their main idea is building and selling AI chatbots, specifically for the CBD industry and also for public companies. Think of it as a digital helper that can chat with customers, recommend products, and mostly provide information. Now, let's look at the most important part, the financials. The balance sheet as of June 30, 2025 shows us what the company owns, what it owes, and the value of its stock. Starting with cash, they had about $1,863. That's not a lot of cash on hand, really. And their total current assets, which are things they can easily turn into cash, were just over $26,000. On the flip side, their total liabilities, what they owe to others, were much higher, around $2.5 million. This means they owe a lot more than they have in easy-to-get assets. When you add up all their liabilities and subtract their assets, you get what's called stockholders' deficit. For 160 Steams Corp, this was a negative $2.5 million. This basically means the company owes more than it's worth on paper at that moment. Now let's look at how they performed during the quarter. For the 3 months ending June 30, 2025, revenue was zero. And for the same period in the previous year, 2024, it was also zero. This is a big red flag. Since they had no revenue, their cost of goods sold was also zero. This resulted in a gross profit of zero as well. However, they still had operating expenses, which were about $117,000 for this current quarter. That's money spent on running the business, even without sales. Last year, those expenses were even higher, around $288,000. So they did cut back on expenses. With no revenue coming in and expenses to pay, they ended up with a net loss of about $210,000 for the 3 months ending June 30th, 2025. This is less than the $339,000 loss from the same period last year. So while they're still losing money, they're losing it a bit slower. Looking at the first 6 months of 2025, the net loss was about $418,000. This is also an improvement from the nearly $600,000 in 2024. Let's see how they managed their cash. For the first half of 2025, they used about $276,000 in cash from their day-to-day operations. This is because of their net loss and other factors like changes in how much debt they owe. Last year, they used even more cash, about $447,000 for operations. So again, some improvement in cash burn, but still negative. On the financing side, they received a significant amount of money, nearly $374,000, from a loan from a shareholder. They also brought in about $71,000 from selling their stock. Overall, financing activities provided them with about $276,000 in cash for the first half of 2025. This all leads back to that very small cash balance of $1,863 at the end of June 2025. It really highlights how the company is living project to project, relying on external funding. The company itself acknowledges this precarious situation. They mention that their ability to continue as a going concern, meaning to stay in business, raises substantial doubt. They are dependent on raising more capital from stockholders or other sources. This is a critical warning sign for any investor. They were spun off from another company called Single Point back in 2021. Their business model is focused on AI chatbots, which sounds modern, but the financial results don't yet reflect that. They use standard accounting rules, but point out that results for this short period aren't necessarily what you'd expect for the whole year. One interesting detail is their management of derivative liabilities. These are essentially financial contracts whose value depends on other assets. The company has to mark these to market, meaning their value is constantly updated and changes are reflected in their income or expenses. This sounds complicated and can lead to big swings in reported profits or losses. Let's talk more about their debt. They have a note payable to a related party. That's the $63,000 promissory note to Single Point from a 2021 asset purchase. They're actually in default on this. On top of that, there's a significant note from a former CEO and shareholder for $1.7 million. They also have convertible notes, which are loans that can be turned into stock. The value of these notes, after considering discounts, was about $55,000 at the end of June. Looking at their stock structure, they have common stock, but more importantly, Class A, convertible preferred stock, and Series B, super voting preferred stock. The Class A preferred stock holders get 50 votes per share and it's convertible into common stock. The Series B preferred stock, though they only have 90 shares outstanding, carries a massive voting power, 10 times the sum of all common and other preferred stock votes. This means a small number of Series B holders can have a huge say in company decisions. There are mentions of employment agreements with key executives. For instance, a former CEO, Gregory Lambrecht, had a salary of $250,000. It also mentions resignations and appointments. Suggesting some management changes, the current CEO, Austin Lambrecht, holds both CEO and CFO titles. Now, this is a crucial part. The company states that its disclosure controls and procedures were not effective as of June 30th, 2025. They specifically cite material weaknesses, a lack of a functioning audit committee, and inadequate segregation of duties. This really points to a shaky internal control system, which is concerning from a governance perspective. They also mention issuing shares of common stock under an equity financing agreement and converting Class A preferred stock into common stock. These actions raise capital but also dilute ownership for existing shareholders. Overall, 1606 Corp is in a very early stage, which often means high risk. They have a promising technology in AI chatbots, but the financials do not show any revenue yet. Their cash position is extremely low, and they have significant liabilities compared to their assets. The material weaknesses in their internal controls also raise governance concerns. Their survival seems to hinge entirely on their ability to secure more funding and transition from development to profitable operations. The super voting preferred stock structure is also designed to give a small group a lot of control, which is something to watch if new investors come in. It's a classic high risk, high reward scenario, but right now the risks are very visible. Alright, that's our breakdown of 1606 Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think their AI chatbot vision is strong enough to overcome these financial hurdles? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribing ensures you don't miss our future deep dives. Don't forget to join our awesome community on Discord. Linked in the description for more great discussions. Thanks for watching, and we'll see you in the next decode.